Obstacles are placed in our way to see if what we want is really worth fighting for. Anonymous. My friends, 10 to 15 minutes a day, that is your obstacle. Finding that time and utilizing it, filling out your daily market worksheets. Like today's broadcast, it would be the weekly market worksheet. That's once a week. And your trade worksheets, whenever you do practice trades, that will supercharge your training. If you have our book, that's great. If you're just starting off, just listen every day. Take the special trainings that are in your notes. And again, if you're not a subscriber, go to chartingwealth.com, sign up for free, and you will get all the special trainings that we put out for you each and every day. Those are important. They're good for you. They help a great deal. We put them out for free, and we are very, very proud of them. The one for you today is the secret of the personal wealth fund. And I just want you to have that training. Check it out in your show notes. Now, that's what everything is about building your own little private, it's almost like your own little private hedge fund. And you learn how to build it, you learn how to manage it, you learn how to put things in it. And again, these are all practice trades. This doesn't cost you anything to do. It takes time though, 10 to 15 minutes. Surely you can find that time for your financial future, can't you? And if you think you're going to go around the web and find some little trick that you're going to beat Wall Street without putting the work in, you're up against professional money managers. This is all they do day in and day out. But unlike them, you don't have to trade. You can wait for the perfect trade. And again, think about that. All you're doing is following weekly vertical crossovers on charts where they work typically. And again, I will agree with anyone. It has been really odd. Has this not been the oddest time of most of our lives? I am 59 years old. I'll be 60 this year. I've never seen anything like this. I've been following the market for 15 or more years? Every day? I've never seen anything quite this crazy. Starting with the COVID crash that we saw happen back at the end of this last February, then the COVID recovery, and then the madness around the election and the aftermath. It is insane. Let's jump into these charts. Stock's up a little bit for the day, 0.37%, but what's interesting, after a weekly vertical crossover going down last week, look at what the market's doing at the end of this week. If you look over to the far left of the screen, I can't hold this line down on the right and use my cursor at the same time, but if you look at that first horizontal line below it, PPO, 4.20. It is just above that 4.18, the exponential moving average 8-period line. That is that's our target or our trigger line there. And of course, it's crossed back over going up after going down last week. Derivative oscillator still positive. Never changed from being positive. Again, that was a bit of a warning sign there. And we go to the half-day chart, the 2-day chart, and check this one out. It finished going up. Even though the weekly now has crossed over going up, the 2-day chart hasn't had enough energy to cross over going up. What does that mean? What is that about? That is totally bizarro, but we're going to go ahead and move our line. We will note the weekly vertical crossover. I didn't put this out, and I'm not going to put it out over the weekend. It may very well work, but it is an odd one. We don't have the 2-day doing the same thing as the weekly, not preceding it. Again, bizarro. Now, that half day that I kept trying to jump into, it has been going up for 5 days, continuing to move up in the morning, about the same in the afternoon, moving up that previous trend line. I mean, again, folks, we're living in a strange, odd world, but we will deal with it and we will let the charts guide us as they move along. Oops, that's not the right weekly. Let's do what we can with that. There's really not much at all that we can do with it, but we'll do what we can with the weekly trend line. That's where we are on the S&P. When the charts get screwy, then what do? Well, you step back from the charts that are screwy. We have one chart that is not. We'll talk about that as we get to it. Look at the Qs. Again, another weird one. The Qs has crossed over. After crossing over, going down, it's been all back and forth. We've been talking over the weeks about the almost lamination, which again, I've explained too why things are doing this. It is because you have to have a good discernible trend. You have to have good movement to help you see these indicators work correctly. And remember, they are oscillators. And if you don't have good oscillation, they don't work right. So we now have a crossover going up. We go to and we see that the price percent oscillator is crossed over. The derivative oscillator still losing momentum, but positive. We look at the 2-day. This was the odd thing. We had the crossover going down on the weekly this last week, but the 2-day never crossed over going down. We brought that up, talked to you about that, how that was a strange thing. Now the weekly's crossed back over going up in the direction of its 2-day. What does that mean? Well, I hope that you are doing a practice trade on this, noting it down, and making sure you learn what that means in these odd times. Does it mean that this is going to be a very successful trade? Since it didn't happen before and things changed quickly, we're going to watch, we're going to see, we're going to let the charts lead us. Things just keep bumping up a little higher, a little higher, a little edging. You look at these charts, you can see it goes up for a couple of weeks, sideways, down a little bit, up for a few weeks, sideways, down, up for a few weeks, down, sideways, up, down, and up again. Again, crazy. Okay, let's go to the half day crossing over, going up. The half day crossed over, going up back on Tuesday. And then sideways from then, and then for the last day and a half, of course, moving up. So again, you can see the movement in these charts, and we will see how this works, how this leads us, and what we learn from it. That is where we are on stocks. Now, the chart that we have watched over and over and over again here lately is the 20-year bonds. TBF is the inverse fund, Tango, Bravo, Foxtrot. That is the short for 20-year government bonds. And of course, it has been likewise going up and going up nicely. We're going to go back, of course. Sometimes you guys ask us, when things go in the inverse, why don't we switch over to the inverse fund? We just don't do it. It's simpler to stay with the chart you're used to, not to try to go to the inverse. It's much lower volume. Again, it's timed and keyed to move in an inverse percentage-wise of the fund that it is the inverse of, so we stick with the fund itself. So what do we see going on? Well, we have a down week hitting, of course, lower lows, price percent oscillator heading down, derivative oscillator heading down. That 2-day recross that we recently saw, we saw it on Wednesday the 3rd, jumping in point somewhere around the 150 mark. And of course, the low so far, a 148.02. So again, we'll continue to watch and see how this continues to move. Derivative oscillator, of course, has gone negative. Price percent oscillator spiking over, heading down. Half-day chart, we can see where it crossed over, going down back on the 1st, and is really trundling down a good bit even before that and continued to do so. Now again, remember, bonds typically move inverse to stocks, so the more we see bonds go down, the more we would expect stocks to go up. That's the way the world used to work. But of course, we're printing so much money. I'm sorry, moving decimal points on a screen now as we flood the economy with money that so far the world still accepts. What does it cause? Inflation. That's what you see in the market as it inflates and balloons and goes up and up and up like real estate. Again, interesting, my friends, very interesting. What do we see with gold? Gold up a little bit for the day. Let's start with the weekly. I keep hoping to see this weekly turn around, but this week has shown us spiking over, going down, derivative oscillator gaining downward momentum. Not a big, strong red down candle, a red down candle, but a long wick on the top. On the bottom, a little one on the top. Go to the 2-day, big down candle over the last 2 days. Of course, all that was the prior day. Today it was up about 1%, but that long candle, price percent oscillator spiking over, going down, derivative oscillator heading down, and of course the half-day chart, we see it bottoming out there on Thursday and then trying to turn around and go up on Friday, which it did a little bit, but not anywhere recovering what it went down. And of course, from that 2-day recross, somewhere at the mark of 173.50, something like that, to a low so far of 167.35 over the course of a couple of weeks. Again, we'll continue to watch gold, monitor it, and of course, remember there's not a good inverse fund on gold. DGZ, way too illiquid. So you need to practice your puts when gold rolls over going down on GLD. Fairly liquid. Good things for you to practice. Of course, if you're a Patreon member, then that means you rate our 3 special trainings. Options Made Simple, the Charting Wealth Way. One of the best trainings we have available at any of the levels of support at Patreon. If you're interested in that, cost you $30 a month at a minimum. And we would love to have you as one of our Patreon members. Now, lastly, I'm going to go to, you got it, Bitcoin. Bitcoin up for the day, 4.52%. Nice up week we ended. Price percent oscillator, though, still going down. Derivative oscillator still negative. 2-day chart, flat, maybe heading up a little bit on the price percent oscillator. Derivative oscillator losing downward momentum, still negative. And of course, price moving up nicely. What are we waiting for? A 2-day recross to go in the same direction as the weekly. When that happens, might be a good jumping in point. Hell, it was last time, wasn't it? Darn sure was. Would have gotten you in at 21,000 to a topper of 41,000. Not a bad deal. Not a bad deal at all. You look back again, too, at where it crossed over going up back in October. Let's make sure that the weekly was going. Yeah, well, no, that wouldn't have gotten you in then. Would not have. You would have gotten in on the weekly vertical crossover at an even better spot at 12,000 and could have ridden that up potentially to 41,000 in your practice trades. So again, we're not a stop calling service. We're not urging you to go out and buy Bitcoin if and when that 2-day recross happens. Why? Because we don't get paid for that. We don't offer that advice. We don't claim that expertise to be advising you on what to do with your money. We want you to practice trade to show yourself approved. And then and only then when you get good at, when you think you get good at practice trading, before you start spending any real money, fractional shares. I want you to do some fractional trading. I'm going to put at the end of today's program for you. You will see it on the screen at the end of the video, fractional shares. Please listen to that over the weekend. It will be the next step for you when you think you're getting good at this. It will help you prove to yourself that you know or don't know what you're doing. Again, otherwise, you're just gambling and being foolish. Why don't you go to Vegas? You can see a show too as you lose your money. So, we love you guys. God bless. All the best from the whole team at Charting Wealth World Headquarters.